Greetings, welcome back to India Business Insights. Today we will look at the Reliance Retail Limited. This is a company which is a matter of few years has come to dominate the organized retailing space and is more than 3 times larger than its nearest competitor. The Indian retail industry is the largest segment of the Indian economy. It accounts for 8% of the employment. Indian retail currently stands at over 800 billion US dollars and is expected to grow at 11% CAGR to become a 2 trillion US dollar market by 2030, driven by favorable demographics, rising income levels, rising share of urbanization, access to better education and aspirational lifestyle. India is the world's 5th largest global destination in the retail space. Indian retail is dominated by a large number of small retailers consisting of local kirana shops, owner-manned general stores, chemists, apparel shops, pavement vendors, etc., which together make up the unorganized or traditional retail. Whereas organized retailing refers to the trading activities taken by licensed retailers. The various forms of organized retail are hypermarkets, supermarkets, departmental stores, specialty chains, and malls. While there were other large format stores in India, the story of organized retailing is said to have started with Pantaloon. Pantaloon Retail India Limited (PRIL), a retailer, was incorporated on 12 October 1987 and headquartered in Mumbai. The company operates primarily through the lifestyle and value formats. Pantaloons, which was acquired by Aditya Birla Nuvo Limited (ABNL) in 2013, is now a division of Aditya Birla Fashion and Retail Limited (ABFRL), having 370 plus stores spread across 180 plus cities and towns in the country. With its new retail identity, store design, and a wide range of merchandise, Pantaloons is one of the leading retail stores in the lifestyle segment of the consumer market in India. While Pantaloons and Future Group had a lot of trouble and were sold to ABFRL, many of the early pioneers of Indian retailing also suffered. Subiksha Retail started in Chennai in 1997 and was selling fruits, vegetables, groceries, medicines and mobile phones. At peak, it had almost 2,000 stores all over the country. It closed by 2009. Vishal Megamart was another poster boy of organized retailing. It was one of the first chain of discount stores. It started in 1994 as a garment store and within a short period it scaled up to be an all-India chain selling reasonably priced apparel and FMCG goods. Vishal Retail Limited was listed in 2007. By 2010, it had got into a serious crisis with large debts. It had to go into painful restructuring with parts of it sold to TPG-backed entity and another to Shriram Finance Group entity. The remaining entity had seen a reasonable revival as V2 Retail Limited. There are multiple such stories of glory, disaster and revivals in the organized retail sector. These are just a few examples to illustrate the perilous journey of organized retailing in India. Notwithstanding this, the last decade has witnessed the entry of a number of organized retailers opening stores in various modern formats in metros and other important cities. While online grocery retailer Big Basket opened its first brick-and-mortar store in Bangalore in the year 2021 under the brand name Fresho, which is their private label brand, we have seen the growth of online retailing. The increase in usage of smartphones and low-cost internet data has led to a boost in online retailing. When online retailing was introduced, there was a pessimistic prediction that online retailers would damage offline stores. To a certain extent, online shopping has indeed cannibalized physical store sales. Customers undoubtedly prefer online shopping due to the lower prices and safe delivery alternatives. Now let's discuss how are traditional businesses adapting to this. Retailers across categories are moving towards online channel to expand their offerings. The dividing lines between offline and online retailing are blurring gradually, where consumers connect with brands through any medium of their preference. Thereby, this makes preference across mediums essential for retailers to connect with their consumers at every touch point. Many consumers still prefer to shop and browse in a physical store. In brick-and-mortar stores, consumers can speak with employees and ask questions about the products or services. These stores have the ability to offer experience shopping, whereby consumers can test a product and can also be provided with instant gratification when a purchase is made. And in just 2 years of almost losing the battle to e-commerce players and the pandemic, physical retailers in India are making spectacular comeback. Brick and mortar retail is expected to grow at 14 to 16% this fiscal, driven by continued expansion across segments, food, grocery, apparel, and consumer durables, and return to normalcy from the COVID-19 pandemic. Now let's discuss the journey of Reliance in the retail segment. Reliance Retail, a wholly owned subsidiary of Reliance Industries led by Mukesh Ambani and is the most important part of Reliance Industries' retail business. It is currently headed by Mukesh Ambani's daughter, Isha Ambani. Reliance Retail commenced its journey in 2006 with the launch of the first Reliance Fresh store in Hyderabad. The idea was to make buying groceries and vegetables a lifestyle experience at neighborhood market prices. The company had to face various difficulties before the launch of the Reliance Fresh because of the protests against organized retailing back in the 2000s. With an investment of Rs 25,000 crore, Reliance gradually widened its horizon across segments such as electronics, fashion, and cash and carry businesses. While Reliance Digital, the consumer electronic retail chain, was launched in 2007, the company ventured into fashion and the wholesale cash and carry segments in 2008 and 2011 respectively through Reliance Trends and Reliance Market. By 2011, Reliance Retail had achieved $1 billion in sales. By 2014, Reliance became the largest retailer, surpassing Future Group in terms of revenue. Around the same time, Reliance tried to test the e-commerce space with the launch of an online grocery store, RelianceFreshDirect.com, to deliver groceries in Mumbai. In 2016, it made a full-fledged entry into the e-commerce with the launch of curated fashion and lifestyle store, Ajio.com. The company operates in consumer electronics, fashion and lifestyle, grocery, pharma, and connectivity, and is a leader in all the focus consumption baskets. As of March 31, 2023, the company operated 18,040 stores with 65.6 million square feet of retail space, having physical presence across more than 7,000 cities in India and direct-to-customer deliveries capacity across 19,000 plus PIN codes. In FY23, Reliance Retail experienced a 50% increase in footfall, reaching a total of 780 million. The registered customer base also expanded to 249 million. To provide high-quality products at affordable prices to its customers, the company has established a robust sourcing ecosystem comprising of local producers, MSMEs, regional, national, and global brands across the product category. In the grocery category, the company connects producers directly to end customers through its robust supply chain ecosystem. In the fashion and lifestyle section, the company operates on a fiver to wardrobe model, bringing the latest and trendiest fashion from around the world to its consumers in the most cost-efficient manner. And in the consumer electronic category, the company has strong relationships with global brands, original equipment manufacturers, original design manufacturers, chip makers, and contract manufacturers, bringing widest assortment at the most competitive prices. Reliance Retail offers a wide range of products and services through its store concepts and digital platforms. Furthermore, the company has expanded its physical footprint in Tier 2 and 3 markets, bringing the benefits of modern trade to consumers in smaller towns. Extending its reach even further to reach India's 200 million households, the company is building one of the world's largest distribution platforms under its new commerce initiative by leveraging its extensive supply chain and sourcing capabilities as well as new age technologies to support and enable millions of kirana and merchant partners across the country, assisting them to modernize, provide easy access to the diverse products portfolio, become more efficient, and generate higher revenues. Through its new commerce initiative, Reliance Retail is investing in infrastructure that links producers with small merchants and consumers to create a winning partnership model. Lakhs of merchant partners have joined the platform and are benefiting from this inclusive initiative. There are 45 subsidiaries and divisions of Reliance Retail, of which some major ones are Reliance Fresh, Reliance Digital, Jio Stores, Reliance Trends, Reliance Footprints, and its e-commerce fashion shopping website Ajio, which was founded in 2016 and generates annual revenue between $10 million to $15 million, competing against other e-commerce giants like Myntra. Now, let's have a look at some of the recent acquisitions. The most recent partnership happened on 28th of February 2024, where Reliance Consumer Products Limited (RCPL), an FMCG arm and wholly owned subsidiary of Reliance Retail Ventures Limited (RRVL), announced that it has partnered with Sri Lanka headquartered Elephant House to manufacture, market, distribute and sell beverages under the Elephant House brand across India. This association will not only help RCPL bolster its growing beverage portfolio that boasts iconic brands such as Campa, Socio and Raskik, but will also bring exceptional new products and value propositions to Indian consumers. Elephant House is owned by Ceylon Cold Stores plc, a subsidiary of John Keells Holding plc, Sri Lanka's largest listed conglomerate. The year witnessed number of such new format launches including Smart Bazaar, Centro, Fashion Factory and Portico. Indian beauty and personal care market at $23 billion is the 8th largest in the world and is the fastest growing consumer market. To serve this growing opportunity, Reliance Retail launched its beauty format Tira that offers a vast collection of national and international brands in makeup, wellness, personal care, skin care, men's beauty and luxury items. Reliance has also acquired Sephora's India franchise business and signed exclusive distribution agreement with SMCP for Sandro and Maze brands. On 1st November 23, Reliance Industries Limited (RIL) opened the Jio Want Plaza (JWP), marking a fresh hotspot for upscaling shopping. This new mall will showcase luxury labels including Balenciaga, Tory Burch, YSL and Versace, catering to India's expanding affluent customer base. Designed as a hub of retail, leisure and dining experiences, the JWP will host several global brands making their debut in India. These include Balenciaga, the Giorgio Armani Cafe, Pottery Burn Kids, Samsung Experience Center, EL&N Cafe and Rimowa. As India moves towards digital economy, shoppers expect multiple payment options and flexible payment schemes during the year. Reliance Retail became the first retailer in India to adopt digital rupee. JioMart has partnered with WhatsApp to launch first ever end-to-end shopping experience. Customers can now shop at JioMart using WhatsApp platform, making it easier and more accessible to them. During the year, Reliance Retail launched Azorte, a premium fashion and lifestyle retail format. Azorte has several industry-first technology-enabled features including mobile checkout, smart trial rooms, fashion discovery stations, and self-checkout kiosk, which will take the shopping experience to a new level. Consumer Brands bolstered its portfolio by acquiring many revered brands such as Campa, Socio, Lotus Chocolates, Raskik, Toffeeman during the year. In 2022, Reliance Retail Ventures Limited (RRVL) bought a controlling stake in makeup and personal care brands Insight Cosmetics. In 2021 report, global market research platform Statista said India ranked 4th in revenue generation from the beauty to personal care market, just behind the US, China and Japan, projecting that online sales would grow 18.2% in the next few years. Some other major acquisitions include Hamleys, Netmates, Urban Ladder, Zivame and Amante. In 2021, Reliance Retail also acquired a 66% stake in local search company Chessdial for Rs 5,710 crores. While we talk about the various acquisitions of Reliance Retail, we must also talk about Future Retail and Future Coupon Limited and the aborted acquisition agreement between Reliance Retail and Future. In August 2019, Future Coupon Private Limited (FCPL) a subsidiary of Future Retail Limited (FRL), entered into a shareholder agreement with FRL, but Amazon gained control by acquiring a 49% stake in FCPL, giving it influence over FRL's decisions. Facing financial challenges, FRL decided to sell its retail businesses to Reliance for Rs 25,000 crore in August 2020. Amazon contested the sale, claiming it violated their agreement, leading to arbitration proceedings at the Singapore International Arbitration Centre. Simultaneously, FRL filed a case in the Delhi High Court against Amazon's alleged interference. SIAC issued an emergency arbitral award, temporarily halting the deal, with FRL appealing the decision. Amidst this chaos of multiple complaints, hearings and fora, on December 17, 2021, the CCI revoked the original shareholder agreement between Amazon and FCPL. The CCI stated that Amazon failed to disclose the interconnected set of agreements that effectively gave it control over FRL and imposed a penalty of Rs 202 crore on Amazon. Amazon then appealed this order before the National Company Law Appellate Tribunal (NCLAT). As legal cases piled up, Reliance cancelled the INR 24,713 crore deal with Future Group in April 2022. As of 2023, the Supreme Court has granted stay on the INR 202 crore penalty, extending the legal proceedings. The situation highlights the continued legal complexities surrounding Amazon's investment in Future Coupons and its broader implications on the Future Group's retail business. The arbitration proceedings in Singapore add an international dimension to the dispute, and the final decision of the tribunal is awaited. The evolving nature of the legal landscape suggests that the resolution of this dispute remains uncertain. Moving on to what makes Reliance Retail a unique venture in India. From doorstep delivery to consumer goods to high street retailing, RR's presence in the world's fourth largest consumer market is just one part of the story. Since the COVID-19 pandemic, the country's largest retailer has acquired a series of prominent firms in the retail space, such as Clovia and Urban Ladder, and has ventured into new territories such as convenience stores, 7-Eleven, and premium retail chain formats, Ajio World Drive, apart from steady expansion of its existing brands, both in physical and online retail. Ajio, its flagship e-commerce platform for fashion and apparel, now has launched an athleisure brand, Accelerate, which will cater to the requirements of sports and fitness. Reliance Retail is India's largest organized retailer both in terms of revenue and store network. In grocery consumption basket, Reliance Retail operates Reliance Fresh Signature, Smart, Smart Point, Fresh Pick, Sri Kannan Departmental and Jayasuriya stores focused on food, fresh produce, bakery, dairy products, home and personal care products, as well as general merchandise items. In consumer electronic consumption basket, Reliance Retail operates Reliance Digital and MyJio store formats, offering a wide range of consumer electronics, home appliances, computing and mobility products, as well as gadgets and accessories. In fashion and lifestyle consumption basket, Reliance Retail operates a portfolio of formats that serves customers across value, mid, premium and luxury segments. Reliance Retail operates Trends, Trends Women, Trends Men, Trends Footwear, Avantra by Trends, Reliance Jewels, Hamleys format and a portfolio of international brands such as Armani, Burberry, Diesel, Gas, Marks & Spencer, Superdry, Brooks Brothers, Steve Madden and more. The company delivered a consolidated profit after tax of 7,009 crore against 4,938 crore for the previous year. The company delivered revenue of Rs 2,60,394 crore against Rs 1,99,727 crore for the previous year, a growth of 30%. And EBITDA for the year stood at 17,974 crore against 12,423 crore for the previous year, higher by 44.7% year over year, driven by broad-based growth consumption baskets. Store addition trajectory has continued to be robust with addition of 3,000 stores, taking the total store count to 18,040 stores in FY 2023. EBITDA for the year stood at 17,974 crore against 12,423 crore for the previous year, higher by 44.7% year over year. Strong growth across formats and digital commerce aided sharp increase in retail contribution. Retail segment has benefited from higher footfalls, new store rollout and broad-based growth across consumption basket. Reliance Retail has also achieved robust growth from sharper opening price points ranges, successful festive and big day campaigns and category-focused events. Reliance has also managed to increase its revenue and profits per square foot consistently over the last 6 years. Retail coverage area now stands at 65.6 million square feet, which is well ahead of any other Indian retailer. Company bolstered its offering and continued to fill white spaces through acquisitions and franchise agreements with brand Gap, Todd, Pret-a-Manger. Reliance Retail's widespread physical store network would further enhance its omni-channel capabilities and position it as a frontrunner to garner consistent business growth by capturing a larger pie of the Indian retail sector opportunity. In public perception, D-Mart is considered as the main competitor of Reliance Retail Limited. D-Mart is a retail corporation that operates a chain of hypermarkets in India, founded by Radhakrishnan Damani in 2002. While we may see competition grow between Mukesh Ambani with Reliance Retail and Radhakrishnan Damani with D-Mart, it is limited to a few specific segments. Reliance Retail has a very wide portfolio of business. Also, there is an increasingly larger difference between the two in terms of size and scale or operations, with Reliance turnover more than 3 times that of D-Mart. D-Mart has a strong foundation which is helping it grow organically. D-Mart has been on a store expansion spree in recent years. Most of this expansion has been outside of the state of Maharashtra, implying that D-Mart is successfully setting up a business in new states. Another significant factor that is helping D-Mart to grow organically is the segment it is catering to. India's retail industry is largely dominated by the food and grocery segment. D-Mart has a stronghold in this segment, thus favoring heavy discounts, expanding more customer options and market expansion. D-Mart's revenue from food accounts to 56.03% and non-food FMCG is 20.93%, whereas the revenue generated from general merchandise and apparel is 23.04%. Undoubtedly, Reliance Retail is the largest organized retail player, but it has a weaker foothold in the food and grocery segment. In case of Reliance Retail, grocery segment of the entity contributes 21% of the total revenue. Connectivity segment is contributing around 34%. Consumer electronics at 27%. Fashion and lifestyle and petro retail contributing around 9% each of the total revenue. And Reliance Retail, whose revenue is currently driven by connectivity and consumer electronics, will see a boost with Future Retail's strong presence in grocery and fashion. New commerce business continued to grow rapidly with expansion of its merchant partner network across geographies. The business crossed a milestone of 3 million merchant partners during the period. Digital commerce and new commerce businesses contribute to 18% of revenue. The business continued to attract and serve millions of customers across the country. The registered customer base grew to 249 million, a growth of 29% year over year. Total transactions crossed a milestone of 1 billion transactions, up 42% year over year. Stores recorded footfalls of over 780 million, which were up 50% year over year. Reliance Retail in the third quarter of FY24 reported a net profit of Rs 3,165 crore, higher by 32% year over year. At a consolidated level, Reliance Industries Limited RIL Chairman Mukesh Ambani, during RIL's 45th Annual General Meeting in August 2022, introduced daughter Isha Ambani as the new leader of his conglomerate's retail business. Isha, who is a Yale University graduate and a former McKinsey and Company consultant, kicked off Reliance e-commerce foray into fashion retail in 2016 by starting online shopping portal Ajio. Isha Ambani, disclosing the company's plans, said their brand's presence was strengthened after they launched new products across staples, home, personal care, and general merchandise categories. Now let's look what is the future outlook of RR. Reliance Retail's commitments in the Indian retail sector is evident by the significant investments it has made in building and strengthening its capacities across the retail value chain, which is indeed having an impact on the Indian retail landscape. The company aims to continue with its journey of bringing competitive products and services to consumers across the length and breadth of the country by further expanding its presence through physical stores and digital commerce platforms. Reliance Retail is accelerating expansion with plans to open more than 2,000 brick-and-mortar stores annually with focus on the smaller markets. The company intends to focus on expanding new commerce businesses by accelerating merchant onboarding and increasing share of wallet. It wants a larger share of the commerce pie with JioMart, Ajio, Reliance Digital, and a new platform dedicated to third-party sellers. It will also work to strengthen supply chain infrastructure and product and design ecosystems to support business growth. Isha Ambani, the new chairman of the company, further stated that they are working on the 10-year blueprint to make the foundation bigger and more impactful. There have been various speculations on the likely independent listing of Reliance Retail Limited. While no date has been set for an IPO, but whenever the IPO comes out, it will make RRL as one of the largest companies in India. Its last equity placement with Qatar Investment Authority of 0.99% stake for US dollars 997 million. This would give the company a valuation of US dollars 100 billion. Reliance Retail Limited is a fast-growing segment of Reliance Industries Limited. Further in India, the share of organized retail is still very small, so there is a large headroom for growth. Further, Reliance has a strong presence in almost every retail segment. It has very strong luxury brands, many of it are owned by the company. Reliance is also building multiple popular brands. It has also built a formidable online presence and is a serious competitor to the bigger players. So Reliance Retail is likely to continue to grow profitably for several years. We hope that this video made on the retail industry and Reliance Retail has been insightful. Let us know in the comments your views about it. For more such videos, please like, share and subscribe to India Business Insights.